Rates live with the mortgage calculator. Today we're going to be going through some live mortgage rates to see what the market is looking like this morning, and then we're going to do a deep dive into DSCR loans, our favorite type of loan here at the mortgage calculator. We'll wait just a minute here to get started. Let us go live on all the different platforms. We do stream this on YouTube, Facebook, Instagram, LinkedIn. So let us go live on all the different platforms. We put the chat up on the screen, so go ahead and drop a comment there in the chat as you tune in. We definitely appreciate it. Hope everyone's been having a great week so far. I see the comments rolling in. Thank you very much. And it looks like we're live on all the different platforms now, so we'll go ahead and get it started. We'll take the chat off the screen for now, but keep dropping comments there in the chat, and you can drop any questions you have in the chat as well if you'd like. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, and I'm joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, and what we do every morning on the show at 11 a.m. Eastern is go through some live rates so we can check out the market, and then we do a deep dive into a different loan topic. Today's loan topic is our favorite topic, which is DSCR loans. This is by far our most popular loan here at the Mortgage Calculator because we do specialize in non-QM loans and working with real estate investors. So great program here. For those of you who don't know about it, it'll blow your mind. For those of you that do know about it, you know that it's an amazing product, and we'll go through that here shortly. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and see what the rates are looking like. So Nick, if you're ready, let's go ahead and pull up that pricing tool and look at the market this morning.
All right, let me switch my screen and we will check it out. Zoom in a little here. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today, January 18th, just after 11 a.m. Eastern. So all of our standard programs are live here. If you'd like a full loan estimate that breaks down all the itemized fees that go into the APR, please get with our team members. We have over 250 licensed loan officers in 23 states. So for the demo today, we'll set up a basic scenario so we can compare across the programs. Set a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. And we'll ask the computer to find the lowest rates we can offer for conforming conventional. And then we'll compare that to our FHA options, which is usually the second option most borrowers go with. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs beyond the standard. We also offer VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. We can quote it, no problem. And USDA is only for eligible properties. If you do happen to be looking in one of those areas, just let us know. We'll start with conforming conventional. We'll do a purchase, 30-year fix for all the demos, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt-to-income ratio of 40. So with these settings, as we do every morning, let's check out the rates. And most of you that watch the news news hasn't been so great. A little bit of upward trend in the treasuries. So we see a little upward tick in the rates here. 6.125 rate for 2.375 discount points and cost. Puts the final APR at 6.403. Yesterday we were at 6.3 something, so just a touch higher than yesterday. And you see that's a result of some of the market news that we've been having here. Now, if for any reason our customer doesn't qualify for a conventional option, usually the next option we want to compare, set up the same exact scenario, is an FHA option. So FHA allows more leniency on credit issues as well as a much higher debt to income ratio, but we'll keep everything exactly the same so we can compare apples to apples here across the programs. And it looks like FHA ticked up a touch as well. Again, it both tracks with the treasuries, usually the yields. So 5.5 rate, 2.25 discount points and cost, but the final APR at 6.416. So FHA ticked up a tad higher today. So it's a slight bit higher here for FHA. Conventional yesterday was a slight bit higher. So you see they both track in the same direction and are roughly the same cost. So our customers that must use FHA, great news is it's about the same cost as conventional here in this example. And our customers that qualify conventional, make sure you check out FHA. In some cases, it may even be slightly cheaper on some days. Now, where we love to specialize is if our customer doesn't qualify for either program. Unfortunately, many other banks or lenders have to deny that customer, but that's where we love to present our additional options under expanded guidelines, where we have over 5,000 additional programs using alternative income. So when we select expanded guidelines, aka non-QM, everything else will stay the same. However, we have a new option pop up where we can change the income type. So full doc is what we use for conventional and FHA. That's 2 years of tax returns. So we'll typically select a non-QM program to take advantage of an alternative here. We have asset-related programs, business bank statement programs, the investment programs for DSCR, just for investment properties. That's our topic today. We'll talk about that shortly. 12-month bank statement is the most popular. That's what we'll use for the demo. We have RSU programs, stated income programs, VOE programs, 1099 programs, P&L programs, and no income CDFI programs. So the one we use for the demo always is the 12-month bank statement. That's the most popular for our self-employed borrowers. Many times when our self-employed borrowers submit 2 years of tax returns, they have various write-offs and may not qualify at all, or just may need a little bit of extra income to get that home they want. Either way, we can solve that problem. No tax returns at all, just their last 12 bank statements here to determine a debt-to-income ratio, calculating just with their cash in the bank, no tax returns at all. So in this example of 40%, of the debt-to-income ratio, most of our self-employed borrowers will make much more income here and can therefore qualify for the program. So let's check out some bank statement options today. All right, and they've been ticking down, which is always great. So non-QM typically ticks down a week or two after conventional. So as we've seen all the conventional rates come down, now we're seeing non-QM. So great to see some sixes here. So 6.875 rate for 2.35 discount points and costs, puts the final APR 7.274. So a great option here for our customers that need to use bank statements. You can see it's actually less than 1 point higher now than conventional. So as conventional ticked up a tad, you see the non-QM has pretty much stayed the same. And for a while there, non-QM was even beating conventional. So definitely check these options out. But this is typical, a little less than 1 point higher for a bank statement option, which is amazing for our customers that need it. And if we scroll down here, there's hundreds of variations. We went over some of them yesterday with Jose going over the bank statement options. We also have a few other episodes. Please get with our team if you need a different option. Some of these may allow credit issues, credit events. Some of these may allow different ways to calculate income. So hundreds of variations. Please get with our team. And now let's do our last couple demos for investment properties. So we love to work with investors. So let's check out some examples here. Same demo, 400,000 loan amount, 80% loan to value, 20% down payment. And we're gonna have the computer find the lowest rates we can offer for conforming conventional and compare that with our expanded guidelines, also known as non-QM. Remember, FHA, VA, USDA, all the government programs do not work for investments. So we'll start with conventional here. The only thing we've changed is the occupancy to investment. So let's check out the conventional options. All right, so same thing as yesterday because the rates have ticked up a tad. We have a conventional but portfolio option. So this is technically not a conventional option, but it follows the same guidelines. So this option is actually the cheapest today. The Freddie Mac and Fannie Mae options here are the standard options. So you see the portfolio option, same guidelines, just slightly better price because it's a custom program. 6.875 rate for 3.25 discount points, puts the final APR at 7.264. And the standard Freddie Mac program, the best true conventional here, 6.875 rate, 3.375 discount points for the final APR 7.277. So you see here, as the rates get a little bit of volatility, you'll see some of our custom programs start to pop up, and that's the case here. Definitely recommend. This is one of our somewhat non-QM programs. Definitely recommend all of our investors check out all the non-QM programs compared to conventional, especially as conventional is very volatile and non-QM is very aggressive, as Jose will explain here in a minute, for investment properties. So for the final demo, we'll set it all up the same. And when we select expanded guidelines, also known as non-QM, first thing we need to select is the income. And the most popular income type for an investment property and our most popular loan, as Kyle mentioned before, and our topic for today, DSCR loans. That's because it doesn't require any income or employment or documentation on that from our borrower. We simply use the estimated rental income from the appraisal to determine a DSCR value. The estimated rental income can cover the expenses, aka the property cash flows. That's a ratio of 1 or higher. We even have options for ratios under 1. But for the demo here, we put 1.5 so we can see all the best options pop up. And finally, prepayment penalty is standard. 3 years is what we use for the demo. There are options for no prepay that cost more and limits the programs that show up. There are also some programs that allow 5 years that cost less, but does limit the programs that show up. 3 years is standard. That's what we use for the demo here. So let's check out some DSCR rates before Jose goes into our deep dive. All right, so almost beating conventional there, but we have a DSCR 6.875 rate, 3.275 discount points and cost, but the final APR is 7.372. I believe that's just a touch above conventional. I'd say 100% of investors, when comparing a DSCR loan at nearly identical pricing to a conventional loan, will choose a DSCR loan pretty much 100% of the time. So definitely recommend all our investors check these options out. And all of our MLOs, make sure you send both options. Even our customers that qualify for full doc conventional will probably choose this option here, as it is relatively identical. Now, if we scroll down here, there's hundreds of variations of DSCR. Some allow different credit events. Some may allow different ways to calculate income. All kinds of cool things we can add. So that is our topic for today. Normally, we don't get to talk about all those ins and outs, but today we do. As our topic for today is our favorite loan, the DSCR loan. So when we do the live pricer, those are our general programs. This is a pretty special program. We have hundreds of options on there. So unfortunately, we don't get to show all the different ins and outs of the different ways of the options. And as I mentioned on the live pricer always, I do it with 3 years as a standard. There are options for 5-year prepay, for no prepay, all kinds of different variations. 40-year interest only can be added. All kinds of different things and bells and whistles that we can add to this super cool and flexible program for investors. So, Jose, I don't know exactly what tricks you have up your sleeve, but let's go ahead and check them out if you're ready.
All right. Good morning, everybody. Thank you for joining us for Daily Rate Slide with the Mortgage Calculator. Like Nick mentioned and Kyle mentioned, definitely DSCR, which is an acronym for Debt Service Coverage Ratio, is our trademark, our favorite product. We definitely love this product. Love to see those saucer-eyed investors when we tell them we can finance them, even though they have 30 properties and they have negative $300,000 in income on their tax returns. They're wondering if anything can happen. And we provide solutions with the DSCR programs and amazing rates. So today I'm going to have a couple of mind blowers for you. So let's jump right on into it here. Let me increase the size a little here. So, mind blower number 1, 15% down DSCR loans. Yes, you heard that correct. 85% LTV on your 1-unit purchase. Now, this is not applicable for 2 to 4 unit. 2 to 4 unit properties are maximum 80%. But for your 1-unit properties, here you go. And look at that rate. 8.875% lowest cost option, and you can buy that down all the way down to 7.999%. Don't forget that last 9. So again, if you saw the rates Nick was posting there on our investment property conventional, not much difference here except for you don't need tax returns and you're only needing 15% down instead of 20% down for your full doc loan. So very good option here. Now our 2 to 4 unit property, like I mentioned, maximum LTV is 80%, but look at those rates. 8.625 with a lender credit. And you can buy that down all the way to 7.5%. And if the seller is paying some points here, you can buy it down even further. And for our 1-unit property, you're looking at 8.5% lowest cost option and 7.375 lowest rate option. So you can buy it down a little bit more than the 2 to 4 unit. Now, our low ratio DSCR, where the DSCR 0.0 but is 0.75 or above. This is maximum 75% LTV. So you're looking at 25% down payment. This is a great program. For example, short-term rental properties, which usually sell a little bit of a premium because of the higher cash flow. But here, there may not be any air DNA comps. The seller may not be doing short-term rentals, so there are no short-term rental revenue reports that the seller can provide. Well, you can do it as a low ratio, 0.75 to 0.99. And look at that. 8.625 has a little bit of a lender credit, and you can buy that down to 7.5%. Very similar rates as we were able to get at our full ratio DSCR. The only difference is a 5% LTV cut, but the rate pretty much the same. Just to here you had 8.5 costing 0.15. Over here, actually the same. 8.5 is costing 0.15. So the only difference there is an LTV adjustment for our low ratio. And now we have our no ratio DSCR. This is where the DSCR is below 0.75, less than 0.75. So technically this property could not be cash flowing at all, and we would still be able to do the loan. Obviously, that's not going to be the case, because even if it's a vacant property, there's always going to be a market rent that's going to be applicable. So your DSCR will never be zero, but this is for when you are under 0.75, and you're looking at a 75% LTV maximum on your purchase, which is amazing as well, right? LTV doesn't drop for your no ratio DSCR at 75, and you're looking at 9.625 with a little bit of a lender credit, and you can buy that down all the way to 8% for your no ratio DSCR. And then last but not least, and this is not 235% down, I'm sorry, folks, that's a typo. It's 35% down. So this is our DSCR 1 unit purchase with 35% down with a 575 credit score. Now keep in mind, it's the same LTV for the purchase and the same LTV for the cash out refi. The only thing that were to change in this option, if you were to do a cash out refi, is a 0.25% adjustment to the rate for cash out. Other than that, same option, and you're looking at 11.25 at a cost of 2.75 points, right? So again, very good option here for your DSCR purchase or DSCR cash out with a 575 credit score, 65% LTV. Amazing option. So looking forward to helping you, all of the investors out there with their DSCR loans, and any loan officers out there on the team, you know where to reach for assistance.
All right. Well, I don't see any questions here in the chat. I know our team is really familiar with this product for sure. Let's see here. Give it a second. Yeah, I don't see any questions, so we can go ahead and wrap it up. Remember, we do this 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different topic. So we got a great new topic for tomorrow. Appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Have a great day, everybody.